In this video, we'll discuss the inside bar pattern. Inside bars are simple but powerful price formations. They represent consolidation in the market. Let's understand what that means. An inside bar forms when a candle's high and low are completely within the range of the previous candle. The previous candle is called the mother bar. The smaller candle inside shows reduced volatility. It signals that the market is pausing. Buyers and sellers are temporarily balanced. Inside bars often appear before strong breakouts. But direction is not guaranteed. That's why context is very important. If an inside bar forms in an uptrend, it may signal continuation upward. If it forms in a downtrend, it may signal continuation downward. Some traders use breakout strategies. They wait for price to break above or below the mother bar. But beginners should be careful. False breakouts are common. Always combine inside bars with support or resistance, and confirm with overall trend direction. Risk management is essential. Never enter trades without a clear plan. Inside bars reflect compression of price. Compression often leads to expansion. But patience improves results. Do not rush the breakout. Wait for confirmation and structure. Keep your charts clean and focused. Avoid overcomplicating your analysis. Quick recap. Inside bars show consolidation. They often appear before breakouts. Use them with trend and key levels. And always manage your risk carefully. In the next video, we'll explore morning star and evening star. If you enjoyed this video and found it helpful, don't forget to give it a thumbs up and make sure to hit that subscribe button and turn on the notification bell so you never miss an upload.